housing market in many countries is dependent upon what could easily be termed as loan economy. India is no exception, right? But have you ever thought whether housing loan is leverage or liability for you? Do you even understand the difference between leverage and liability? Have you ever been taught to differentiate between good debt and bad debt? A good debt is one where you earn more with the borrowed money than the interest being paid. On the contrary, a bad debt is one where the interest rate is higher than earning if there is any earning. So you have to pick wisely whether a debt is your ally or enemy. Does a house on loan have asset capacity to deleverage your financial obligations in the wake of an emergency? I am Ravi Sinha, and all that I am trying to tell you is to think again. If your home loan is just a function of your future earning potential, this could be a liability with potential to destroy your life in case of an emergency. One question that I am asked at various forums is that whether one should buy a house on loan. Of course, this has reference to my public view across media spectrum that a home loan is more often than not liability and not leverage in India. I must add here that seeking an answer to this question, most of the people asking this are already having an opinion on this. All that they need is a confirmation bias, something that they could justify to self and others with a statement of confirmation. Someone who understands the world of real estate and finance also said this, right? I have hence always maintained that there can't be a one size fits all answer to this. To each his own. There is a reason why the subject of money management has been called personal finance. It's very personal. Whether a home loan is a leverage or liability depends upon the borrower. It would be a very generic statement to say that a piece of property with borrowed money is leverage. The same goes true with the generalized statement that housing appreciation being slower than interest paid makes a lousy financial choice. These are actually lazy answers to a complex problem. Say for instance, someone having 1 crore in his investment portfolio that earns him 14% per annum takes a home loan at 8.5% interest rate. Now with the interest arbitrage of 5.5% in earning and debt repayment, this would qualify as leverage. But the same home loan at 8.5% interest could be a liability for someone if the given property is his only asset and the said property is appreciating at a nominal rate of 6 to 7%. A lot of financial experts even believe that instead of paying 8 to 8.5% interest to bank, it would be prudent to stay on rent in the same house with 2 to 2.5% payment, and the rest could be invested in high appreciating asset. This could enable the person to buy the same house without any home loan in the next 10 to 15 years depending upon the returns. But that is a subject of discussion for some other day. The game of leverage and liability is not limited to just the financial calculation. It is much more for an average salaried middle class Indian. The cultural belief in this part of the world is that a house, a roof overhead, is the biggest social security. Right? But wait. If a house on loan is the only social security with you, this psychological security won't help you in any given emergency. Say for instance, there is a medical emergency in family that needs large capital after say 4 or 5 years of buying a house on loan. Does your house have the asset capacity to bail you out? If you wish to liquidate the said property in urgency, it would mean a distress sale and would fetch lower price than the prevailing market price. Mind you, the EMI that you have paid to the bank in the initial few years of property acquisition is mostly the interest paid and not the principal amount. So in your financial calculation, there could be a potential situation where you need to pay more to the bank than what the current selling price of the said property is. So this kind of loan is a liability. Does it mean that one should not buy a property on loan? Of course not. If you have a net worth and exposure to other liquid asset class that can take care of your emergency needs, then your home loan is a leverage. You are earning higher with your money than what you are paying to the bank for loan. More importantly, a piece of property is your risk mitigation strategy, and you are not putting all your eggs in one basket, be it stocks, mutual funds, gold, or real estate. After all, stock market in this part of the world, in our country, is not very regulated, not as regulated as in many matured economies. So in such a scenario, property being less volatile compared to financial asset is a prudent financial decision. So it all depends upon the profile of the borrower that defines whether a home loan is leverage or liability. While it is leverage for someone having a net worth, it is definitely a liability for someone not having any financial backup plan and having bought a house due to cultural conditioning in this part of the world. I often wonder why one slogs the initial 10 years of his professional life to save the 20% down payment amount and then further slogs for the next 20 years to repay to the bank. Customer enablement with home loan is a smart strategy. But this is a smart strategy only for the banks and the builders, not the home buyers. This also raises a fundamental question as to who is an ideal candidate for buying a house on loan. In other words, who can turn loan as leverage? Well, in an ideal condition, a person who can serve his EMI with the passive income generated from his other investments is the ideal case study of leveraging a loan. Unfortunately, this is not the reality of a vast majority of Indians. Several studies have shown that 98% of urban salaried middle class Indians don't have any social or financial security. They are mostly living a paycheck to paycheck life and more often than not are just one step away from a medical or legal disaster in life. What makes the case of home loan borrowers even worse is the absence of financial education in this part of the world. Several studies have shown that most of the home loan borrowers don't even understand the terms and conditions of the loan. They don't understand that the banks mostly deduct the interest part first in the initial few years and keep the principal intact for the latter part of loan repayment. Understanding of prepayment fee or penalty is also very limited. Very few home loan borrowers even negotiate the prepayment fee if they get some money to prepay the loan, and prepayment penalty is often as high as 6%. I must add here that the statement of people falling into a debt trap with home loan may not be 100% true. It nevertheless is a reality, a predominant reality. Home loans are no doubt cheapest loan available in the market, and the whole argument of loan as leverage or liability is not black and white. It's never a black and white situation. It's actually gray. But those who don't understand the financial game of leverage and have just started earning a home loan, it's just a liability. And not just a liability, it's also a potential debt trap. I rest my case. Thanks for
बिजनेस की बात तो सब करते हैं, लेकिन क्या मीडिया का रोल महज कंपनीज के प्रॉफिट और लॉस अकाउंट का हिसाब रखना रह गया है? कितनी इन्वेंट्री सेल हुई, कितना बिजनेस में आया इन्वेस्टमेंट, इन सब की बहस के बीच पूछता है आम आदमी, इसमें मेरे लिए क्या है? कहीं ऑल्टरनेटिव मीडिया भी इंस्टीट्यूशनल मीडिया की तरह गॉसिपिंग करते हुए अपनी क्रेडिबिलिटी तो नहीं खोता जा रहा है? जाने अनजाने कहीं हर कंटेंट क्रिएटर बिल्डर की पीआर प्रोपेगेंडा का हिस्सा तो नहीं बनता जा रहा है? कौन करेगा हाशिए पर खड़े आम आदमी के काम की बात। सब्सक्राइब कीजिए ट्रैक टू रियलिटी यूट्यूब चैनल। यहां होती है आपके मतलब की बात।